It is brutal out there. Brutal out there. This is one of the biggest Bitcoin corrections that we've ever seen. Everyone is down. Everyone is hurting. Everyone has lost money. No one expected this. Everyone expected another wave up. But here we are. Here we are. This is where we're at. This is our reality. And the truth is we can have a pity party where we feel sorry for ourselves. But when the pity party is over, we need to ask ourselves a whole lot of questions. We need to ask ourselves how long this is going to last for. How low is crypto going to go? And if you're down a lot, well, then the question is, what do you do from here? And that's what we're going to be speaking about today. I've got a whole lot of big guests on the show. We're also going to be talking to Miles Deutscher about Fantom and the TVL snapshot that was taken. We've got Gareth Soloway on the show today talking about macro, where the NASDAQ is, what he expects from the Fed. And then we've got Tech Dev to tell us what's going on with the charts. It's going to be a big show today. We're going to be answering a whole lot of important questions. Stay tuned until the end. Wow. It is brutal out there. Bitcoin trading at $33,230. We did have a little leg up. Earlier. Let me go into the 1 hour chart. You can kind of see that little leg up. Look at that recovery that we had on the 1 hour chart. You got Bitcoin went up to 38,000 on the 1 hour chart in some kind of recovery. But then, you know what happened? The NASDAQ, the tech-heavy NASDAQ, which was up. The futures for the stock markets were actually up last night. And then this morning, they just couldn't hold their gains. They just could not hold their gains. And here we are. The NASDAQ now is down another 418 points, or almost 3%, in what is continuing to be a bloodbath. We've got crypto, we've got Bitcoin down from its highs over 52% from its highs. And you can see that we haven't had many 52% declines before in the past. We had one last year, the big correction in May, where we went down about 50%. We had one, the COVID one in 2020, in March 2020, where Bitcoin and the rest of the economy went down 63%. And then the last time that we had a 50% plus drawdown was in 2017, in the big correction of 2017. And then if we continue to go back, there weren't many others. I mean, Feb 2014, we had 60%. And December 2013, we had 60%. So this is one of the biggest corrections in Bitcoin's history. Certainly a lot of questions being asked. There's a lot of questions being asked. We're going to try and answer those questions today, particularly for those people who are new or people who are newish and their portfolios are down a lot. Well, what is the best strategy? For those who've been here for a while, well, how should we play this? How long is this going to last? There's a lot of questions in everyone's minds. And today is when we're going to be answering those questions, and we're going to bring on a whole lot of big guests to help us with that. So if you're new to our family, well, I'm sorry that you had to join us at a time like this. But you know what? Millionaires are actually made in a bear market. Millionaires aren't made in a bull market. Millionaires are made for people who enter markets in a bear market, buy things cheap, and then ride them until they get expensive. Millionaires are not made, and billionaires and riches aren't made when the markets are going up. When the markets are going up, it's the tourists that come in and they maybe capture 5% of value, but they're going to get wrecked. The people who make the most money are the ones that position themselves correctly in a bear market. And that's really what we're going to be focusing on right now, because we are where we are. And you know what? We can have a pity party. I had a pity party all weekend, and I took pity on myself for not selling the top, and I should have sold 69,000. And then when the pity party is finished, then we're going to get down to serious business, and we're going to answer some serious questions. We're going to answer some serious questions about what the Fed is going to do, because all this is around what's happening with the Fed and how quickly Wall Street expect the Fed to be increasing interest rates and tapering on the balance sheet. That is why the markets are reacting the way they're reacting. This is not a crypto thing. This is not, no amount of crypto data or on-chain analytics is going to answer the question as to why the market's going down, because this is a much bigger thing. This is much more about tech stocks, and they are bleeding. Down another 3% today in anticipation of the Fed's meeting on Wednesday. Let's look at some tokens off the high. Terra Luna, 49%, Bitcoin over 50%, BNB 51%, Ethereum over 53%, Avalanche 65% off its high, Solana 70% off its high, Cardano more than 70%, Polkadot more than 70% off the highs. And this is at a time where the fear and greed index is at 13. It was yesterday at 11. And we know traditionally that when the fear and greed index gets to 10, those are historical generational buying opportunities. Question is that one of those moments? We're looking at the fear and greed index right now at 13. The Bitcoin fear and greed index is the same level that it was during the summer of 2020 lows. In other words, the May-June lows of last year. Crypto fear and greed index currently in the bullish zone. Not the best moment to be selling, and that's Il Capo of Noia. Not the best moment to be selling when people are fearful. How should we be playing this? And I thought to get a good indication of what the Fed's going to do, get some and see how the markets are going to react. I thought we'd bring my friend Gareth Soloway in. Gareth, how are you, my friend?
I'm doing really well, Ran. I mean, it's ugly out there, but trust me, there's hope, and I'll show you guys some of that in just a minute.
So I'd love to see the hope, but I mean, how do you make out what's going on right now? The Nasdaq is down another 2%, 400 points, sorry, almost 3%. What do you make of what's going on in the markets right now?
Yeah, I mean, this has gotten to the point where it's just, throw things out and ask questions later. It's full on fear. I actually have it penciled in that we should see a bounce in the Nasdaq either later today. In fact, I don't mind going on record and saying there's a chance that we even close green today on the NASDAQ. I have a key level on the NASDAQ 100. If you guys don't mind me showing my charts here.
Yeah, let's share your charts. Your charts are much more important than my charts, that's for sure. Guys, give Gareth some love. Smash the like button. Subscribe to the channel.
Yeah, thank you guys.
There we go. There we go.
So there's a huge level on the Nasdaq. You can see pre-market we're almost there already. So there should be a bounce here in the Nasdaq 100. And again, as soon as you see the Nasdaq starting to bounce, crypto will start to bounce. And let me show you something cool. So when we were at 65 to 69,000, I cast shade on the rally. I said I don't think it's a real breakout. There's too many issues here. It's a lot of hype and so forth. But what I do see on Bitcoin now has me actually buying Bitcoin here. And I know that might be a shock to some of you guys, but let me show you what I have on my charts here. So number one, let's look at a parallel channel. Connect the April high to the high from November, right? And just stretch that line out. So connect those highs perfectly, drag the parallel line down, and look at what you have. Look at where we currently are right here, touching that lower end. So what that tells us is that Bitcoin has dropped the same amount as it did from April to the bottom as it did from now November to the current bottom. So that's one thing that tells me a short-term bounce could likely be here. The other thing I have for you guys is another trend line that could be of significance, which is almost intersecting. And what you do is you take the 2017 high here and you connect it through these recent lows, right? So the lows going back to earlier this year. And you can see that we're just about coming into that level as well. So on a technical basis, we are oversold. So we know that. We know that we're now hitting kind of the exact replica of the earlier April to May, June collapse that we saw before the big move up. And you also have this trend line going back to the previous cycle high of 2017 that can also be of significance. So again, do I think it's the bottom where we're going to go back to all-time highs? Probably not, because there's still a lot of deleveraging in the system. But do I think we're going to bounce back into the 40,000, maybe above 40,000 range? Yeah, I do think we could go back there off of this level.
So it does feel very much like Bitcoin is oversold. If you look at the Nasdaq is probably down about 15%. If we take a look at the charts, the Nasdaq, the tech-heavy Nasdaq is probably down around. We can just measure that. So we're around 15% down if you take the futures price right now. Bitcoin is down 50%. Do you think this is a case of Bitcoin leading the market and maybe being a little bit too oversold relative to the market? I think you summarized it correctly where you said that the markets, let me just quickly try and find your tweets here. I think it was an amazing tweet where you said, hold on, let me try and find it here. I think I had it here. Worst thing for crypto was when the stock market closing on Friday and closing at lows, and that was after it was a reversal. So the markets were up and then they reversed and they went down. The fear of continued market collapse is pervasive, and the only thing investors can do is sell crypto because everything else is closed. When stocks bounce, crypto pops. So it does feel like crypto has run a little bit too far down and that it's going to shoot back up like an elastic band afterwards, right?
Yeah, so I do think you're going to get a bounce. I think it'll coincide with the NASDAQ. But what's interesting, if you look at 2017, crypto topped out a few months prior as well to the stock market. So in a weird way, it's a leading indicator historically. And it makes sense, right? Because even though crypto's been around now for 12, 13 years, it's still a new asset compared to stocks, which have been around for, since the, arguably the 1920s or even way before that. So it does happen to deleverage first, and you see money running away from that first. Down the line, I think in 5 years that won't happen. I think it'll be much more like a stable, asset class to invest in. But right now there was look at going back to the November and October. There was so much hype. I was in Dubai. I was at a big conference, a big summit there talking, and the Bitcoin ETF was just launching, and there was just so much hype. You never want to see that. When something breaks out and it's going to have a big leg up, you almost want people to be doubting it at that point versus really all in.
So John Street Capital has a very interesting post. I'm not going to go through the whole post. He says roughly 40% of NASDAQ stocks are down 50% plus from the 52-week highs. The ratio of stock hitting 52-week lows is at the highest since March 2020. And all the money's kind of gone into a few names, which have kind of kept the NASDAQ positive. He goes on in this thread and he says the indices have been supported by a handful of names, but those names have started to crack as well with the risk-off move to start the year. Comparing it to Bitcoin, okay, he goes into Bitcoin and he goes into a whole lot of altcoins, but he finishes this whole tweet by going, Bitcoin bottomed in March 2020 as the Fed's CBs and government globally went on a period of unprecedented monetary and fiscal policy. Bitcoin peaked as the Fed's tone started to change and QT started to hype. He says what he's alluding to is that Bitcoin is actually the leading indicator. Mm-hmm. And so he says Bitcoin also acted like a leading indicator in December 2018 when Powell changed his tune and Mnuchin rolled out the plunge control system. All eyes on Powell and the Fed and the FOMC meeting on Wednesday, but Bitcoin will serve as one of the most important leading indicators for macro markets. So you kind of get this feeling, you get this feeling that Bitcoin is actually leading, right?
Yeah, you do. Absolutely. And again, the Federal Reserve, for everyone that doesn't know, they're meeting on Tuesday and Wednesday, and we'll hear from Jerome Powell on Wednesday. And if the Fed talks any sort of dovishness, comes back a little bit, backs off from the tapering or the rate hikes this year, you will see Bitcoin also get a major, major bounce. So I do agree that it's a leading indicator in many ways, just like it led when it topped out in October, November, and the stock market didn't top out until really late December. The same thing could be said for when it makes the lows. Absolutely.
What do you think is going to happen at the FOMC meeting? What do you think Jerome Powell is going to do? Because they're now balancing a very fine line between the markets collapsing before an interest rate hike and before they start tapering. And on the other hand, they really do have to do something about inflation. So they're caught in this conundrum. What do you think comes out of the FOMC meeting?
So first off, the Fed is in a horrible corner, right? And it's a corner that they put themselves in. So when inflation was 2%, they could print as much money as they wanted, no real repercussions. The problem is they can't do that as easily now because what are they going to do? Make inflation go to 20% from where it is now at 7 to 8%. I mean, it does kind of tie their hands just a little bit. So my guess is they're going to thread the needle on Wednesday and basically say, hey, listen, we're going to continue to taper, but we are here to back off if the markets need us to, if the economy starts to struggle, which inevitably it is going to. So again, raising interest rates has always been a method to slow the economy down. As soon as unemployment goes up, which is their other mandate, then they will have to come out and stimulate, which is, by the way, even though I think after this near-term bounce, Bitcoin unfortunately has more downside, the long term is just so golden for Bitcoin because the Fed can never stop fully printing money because the markets, again, are too intertwined with the economy. And ultimately, if the markets fall, then unemployment shoots up and the Fed must attack it with more leniency in monetary policy. So
what I'm hearing from you is pretty much what we're thinking. You're saying that they are going to increase interest rates. That's kind of inevitable. I think the first interest rate increase starts in March. And then it's just a question of when they start tapering. In other words, reducing the money into the economy by selling bonds that they bought previously into the economy. I guess that is what we're expecting. Is that what you're expecting for interest rate hikes this year, starting off in March?
So right now they're tapering the 120 billion a month that they were pumping in. They still have a balance sheet that's $9 trillion, right? And their still interest rates are basically at zero. My guess is they're only going to raise interest rates once or twice this year. That's it. They won't be able to do more than that because the economy will suffer too much. They're going to have to back off and ultimately just stop. So again, the market is pricing in 4, but I think they do 1 or 2 maximum, and then they're going to have to back off. So that would actually be longer term bullish, later second half of the year for Bitcoin.
It feels like half of the Fed's work has been done already in this little market correction. The point of what the Fed's trying to do is slow down the economy and cool off the markets. And it looks like just the talk of this has already cooled down the market. So maybe the Fed's work is already done.
Yeah, I 100% agree with you. I don't know if they still want to get away from the tapering. I mean, the money they were printing because of COVID, because COVID, again, is kind of on the back burner at this point. But there's no doubt that the wealth effect that was created by pumping the money in is now getting sucked out of the economy, which naturally will bring down a little bit of the inflation. I don't think it's going to bring it to 2%, but probably back to 4 to 5%. And then it's no doubt that it's going to slow the economy down a little bit, which ultimately, if it slows too much, then the Fed comes back in with their printing presses.
Look, it doesn't matter. It doesn't matter. The markets have already been slowed down, and the spending has already ceased. They've got to just show that they've got inflation under control. I don't think they have to bring inflation immediately back down to 2%. But if they can show that last month was 7%, and next month is 5.5%, and the month after that is 4.8%. Yes. Then people will start to believe that the Fed's got this under control. And that's really all they need, because they don't want to cripple the economy. They just want to show that they are in control of inflation, and inflation hasn't run away as fast as they said it's run away.
100% right. Absolutely. The Fed doesn't want to do anything that the Fed is doing. They want it to be gradual, because anytime you get a big move one way or the other, it causes this freak out. And the freak out started when the Fed not only said they were tapering and going to raise interest rates, but then they even brought up in late December that they were wanting to run off their balance sheet of $9 trillion. And that's when the market freaked out. It's too much, too fast. They need to kind of calm down a little bit. Then the markets can kind of stabilize here.
All right, Gareth, I know you've got to be going for the opening bell. I see that right before the opening bell, the NASDAQ futures down 2.62%, 381 points. We'll be watching the opening, as I'm sure you will be watching the opening. Thank you so much for coming on Crypto Banter. I know that you've got to have your finger on the trigger for the opening bell, but you've made some time to be there. Much love from the community. Thanks very much, my friend.
Thank you for having me, Rand.
All right, so that's Gareth, and we are watching the opening bell. The opening bell will be in a couple of minutes, and we are down 372 points on the NASDAQ. Bitcoin is currently at 33,548. I do agree with Gareth that the market opens and we get stability during the day. And when we get stability during the day, bang, both Bitcoin and the market will turn. Let's see if we're right. We maybe even get that down. We maybe even get that here during the show. I listened to the All In podcast this weekend, and it was quite interesting to understand where Chamat Palihapitiya, believes that we are in the cycle. You got to hear this. You got to listen to this. Let me play this for you guys so that you guys can hear it.
The market condition changed.
Well, I think maybe we had enthusiastic people betting things up without looking at fundamentals, is my point. I think Sachs agrees with me here on this. So I think
you're right about that.
Yeah.
Right.
So now you have market participants who were gambling on like momentum. Now we're repricing stuff. Do we think, where are we at in this repricing or correct pricing of assets?
We're in the 8th, in my opinion. I think we're in the 8th inning of the tech drawdown. So
Got it.
If you're a high growth tech company, you've been smashed for 3 months in a row. As you said, Jason, we're off. Some stocks are off 50 to 80% of their highs.
That's like .com era corrections.
Yes.
It really is.
That's crash. That's .com era crash.
Yes.
If you're in other areas like value, you've had a pretty good rally. If you're in crypto, you're just starting to get smoked now. If you're in
why isn't crypto? I want your thoughts on this, Jamal. Why isn't crypto getting smoked like Peloton and Zoom? Is it because those people are hodlers or something?
Well, crypto, I think, has slightly different dynamics than individual stocks like a Peloton. But I think that you're going to see
earnings release for one.
Right, but you're going to, because like you have to understand what
all that the market is who's bidding and who's coming into the market. I mean, there's still thousands of millions of people from around the world stepping into the crypto markets each day that are putting more money into these markets, and that balances out the withdrawals. And that's all that crypto is. There's no fundamental underlying business that you're valuing.
The Peloton release was really bad. Okay, I mean,
Okay, so then they start talking about the Peloton release. But I mean, interesting to hear that what he says is the NASDAQ has taken a big hit. And if you're in tech stocks, you've taken a big hit. But if you're in crypto, then the collapse has just started. He's saying that the collapse has just started in crypto. So very interesting take to see all the directions where it's coming in from. I believe that Bitcoin is actually a leading indicator. So it's exactly what I spoke to Gareth about now, that Bitcoin has actually led the market in the last couple of corrections and in the last couple of market recoveries. It was actually Bitcoin that led the market recovery before the stock market led the market recovery. And it was Bitcoin that led both of the previous dips in the market, which is exactly what we spoke about. Anyway, regardless of that, we are at a point now where there is extreme fear. And we know traditionally that extreme fear represents extremely good buying opportunities. And there are a whole lot of on-chain metrics that are positive. There are a whole lot of on-chain metrics that are positive. And if you look at Dylan Leclerc did a tweet, which is a great tweet, but it's about 30 tweet thread, which is not something I want to take you guys through, talking about the on-chain metrics. To simplify it, we do have some other on-chain metrics which could be positive. It could be really, really positive. So one of the on-chain metrics that we have is we have $2 billion worth of options, which are going to expire at the end of January. And as we stand right now, the point of max pain, which is usually where the options tend to close around, is around $44,000. This means one of two things: run back in turbo or massive volatility that are yet to be seen on the options. So there's a lot going on in the options market showing us that there might be a pump in Bitcoin, which does feel oversold. Lex Moskowski says if you look at the on-chain data and specifically the unrealized, the UTXO, the unrealized transactions, the realized price distribution, you're looking at a 33,000 major support level on-chain. You also have a lot of panic going on, but while the panic is going on, the whales or the illiquid supply, which is Bitcoin that never ever move, those Bitcoin are actually going up in value, which means that the people that are buying are the people that are putting Bitcoin into the illiquid supply, which means that the whales haven't capitulated. This is much more smaller fish being capitulated. On that same thread, you're getting Binky Pond. Let me follow this person first. Binky Ponderosa. And Binky Ponderosa says, guess who's still buying Bitcoin? Smart money gap. He calls this a smart money gap. It's the flow of coins between the 6 months plus holders and the short-term holders. And what you can see is that it is starting to really, really diverge. The red line is what he calls the dumb money, which is the less than 6 months. And the green line is the hodlers. And so what we're seeing happening here is that the short-term people are selling it to the long-term hodlers. So the dumb money is selling their coins to the smart money, and the smart money has been correct more times than it's been incorrect. That's another thing that we're seeing on the on-chain metrics. Ki Young Ju, who's the founder of CryptoCoin, says the MVRV, which is the market value over realized value, which effectively is the profitability of coins in the market, is at 1.5, which indicates that Bitcoin wallets still have 50% unrealized profits. Now, when they capitulate is when they've got no more unrealized profits. And so he's saying we've got to keep our eyes on the historical bottom. The historical bottom is when the hodlers don't have any more realized profits, which means that they are all at profits. And as the price goes down, they get to a point where they're about to make losses. And that is usually the point of capitulation. And he's saying keep an eye on this chart, because historically, when this happens, that is usually the turning point. You can see it was a turning point over here. You can see it was a turning point over here. And you can see it was a turning point over here. And we're heading back to that level. Although the MVRV is at about 1, the market value over realized value is at about 1.5. So we're not there yet. We're certainly not there yet. Another one, On-Chain College says, fear and capitulation. 2.5 billion in net realized losses yesterday. In other words, people actually taking realized losses. And you can see the previous times that people took the realized losses, that's when the market started to pump. So both of those chains are on exactly the same thing. So it does feel like the on-chain metrics are telling us a story that may be bullish. But regardless of the on-chain metrics bullish, this is a much bigger thing. This is about the macroeconomic environment and how crypto is relating in terms of the macroeconomic environment. And even though the NASDAQ has gone down about 15%, it does feel like crypto has overreacted and has overshot the mark down. Now, to talk more about that and to talk a lot about the on-chain metrics, I've got our friend TechDev. TechDev, welcome back, buddy.
Hey, Rand, how are you? Thanks for having me again.
It's so good to have you here, but not on a market like this, man.
Yeah, you always seem to bring me on the best days, but I'm thrilled. I'm thrilled to be here.
All right, what are your charts saying here? Usually, you're the guy that I turn to when I need some hopium because you've seen all the patterns, you look at everything. What are we looking at here?
Not so much. You know, I mean, not so much in that I've obviously missed plenty. I think a couple of sessions ago when we spoke, you know, I was expecting for us to start moving up, and then you had me on and I mentioned that, well, we failed to close over this key fib level here in the cycle, this 1618. So I was not expecting any next impulse to begin until we closed over that level. Now, you know, obviously today sucks. The last few weeks suck. We've been in a downtrend for now 2.5 months with 0 relief bounces. I mean, what I spent the time doing is looking at the impulses and corrections as I see them, as I call them, throughout, especially this cycle. I mean, past cycles, I still see similarities in behavior between fib levels, but in my opinion, the market, especially Bitcoin, has not impulsed until about February of last year. I really feel like we have been in a correction since then. I realize we made an all-time high since then, but that is not unusual for running corrections, and it's not unusual for a Bitcoin running correction even last cycle. And I look at a few things to tell me that this is the case, and I'll get into those in a bit, but especially is the volume. I mean, the volume has been non-existent since February of last year. It's been declining, and we've continued to just range, now painfully so, in a McDonald's logo meme producing chart now of an M pattern going sideways between 69 and 30, and we'll see if that holds. But for over a year now. So I view the market as having been correcting for almost 12 months now, despite Bitcoin putting in an all-time high. People might call that coping or hopium, but that's what the data is telling me. And if you look at another way of looking at this, besides just trading volume, and you look at an on-chain metric like the number of new addresses, and you look at the trends that this has occurred in over the past cycles, what this shows me is surges and then declines in, oftentimes I would say, retail interest. So, I mean, I'm still expecting another market impulse at some point, to be honest. I know no one believes that, or few believe that today. Few believe that down here when we had this steep correction after this first impulse. But if you look at the trends of what's going on, especially in this last section here, along with trading volume, new addresses on chain surged up here, similar to how they did up here, and then they dropped off dramatically, and they've been in a downtrend since. We put in a much lower high in new addresses on chain, despite putting in a higher high in price, just like over here. And actually, most of these corrections in history have seen that behavior, where you have a drop off in addresses, but a higher high in price. This divergence here. So there's another thing telling me that the market has been correcting sideways now for about a year. I know coins have put in all-time highs, Bitcoin has, but it's still, to me, has been a sideways market, even though the emotions have been crazy up and down for a year.
So what's the best way to play this market? I mean, right now, it feels like it's all doom and gloom. I guess the question that everybody is asking is, should we be getting back into the market, or is getting back into the market like catching a falling knife right now?
Sure.
And every time we get a relief rally, I mean, yesterday we saw a slight sign of relief rally where some of the altcoins turned green very quickly, but then all of that was erased this morning, and we were back down to a lower low on Bitcoin. How would you be playing this right now?
Yeah, no, I think that's a really good question. I put out a newsletter, the full issue last Saturday, and I said up front, I'm not buying right now. My strategy right now is to see where the dust settles. I have not wanted to be trying to catch a knife, as you say, on the way down. I think that my approach, and that's all that I can say is what my approach is to look for when a bottom has likely been reached in Bitcoin, and look for support structure to be built, because that could be a good time to add to my Bitcoin positions. The alt positions, I'm still not sold to be jumping into right now, because during that sideways period, after support or while support is being built, you could still certainly see altcoins continue to bleed out. So I would be looking for some signs of strength and some reclaims of key levels in Bitcoin before I jumped into new alt positions. But I think there are going to be some extremely attractive opportunities out there, so long as you enter, sensibly and with a strategy in place. But I think the play now is to try to wait for this carnage to end, for this correction to finally complete, and to show signs that a new impulse is beginning. And here are just a couple other things where you see, I know this is going around quite commonly. This is the S&P back during the housing crash. This is an expanded flat correction that we might end up being in. Right now, I still think we're in our running flat, like the NASDAQ back in the 80s. But there are some other signs that the market is getting close to bottoming. You've got stablecoin supply ratios reaching a potential bottom, almost to break through its Bollinger Band, like it has at every major bottom in the past. It's not there yet, so we definitely could still see some more downside. You've got the weekly right against, almost outside its weekly Bollinger Bands, that has always produced at least a short-term relief rally thereafter, where you typically go to the other side of the band. And then the RSI level is down at 35 on the weekly, and every bear market has bottomed between 29 and 35. So
when was the last time that the RSI was at these levels? When was
well,
the
yeah,
last
exactly. I mean, the monthly still has some room to go. I think monthly RSI is bottomed at 44, 45 in all past bear markets. We're approaching 50 now. The weekly is about just as close. It's at 35, and you look here at the March 2020 crash, it bottomed right there at 35. Back in the last three bear markets, it bottomed between 35 and 29. So my argument is my view is, yes, this has been awful. We've been going down with no relief for 2 months, but I believe exacerbated by the global economy and uncertainty there that certainly has to be considered, which is why I'm not jumping into positions right now. This highest likelihood is this is the tail end of a year-long correction, where at the very least you could say we are much closer to a bottom than a top. And that's how I see it.
I must agree with you. It does feel like it feels like we're very, very, very close to the bottom. And yeah, I mean, it does feel like that way. All right, so you'll be in touch with us. You'll let us know when in your mind we maybe have hit a bottom and when it's probably time to start buying. If people want to find you, obviously they can find you at TechDev on Twitter. Where else can they find you?
Yeah, I'm just on Twitter. That's where I'm active. I know there folks get scam requests, unfortunately, from all the other platforms, but I'm only on Twitter. And like I mentioned, I put out the newsletter a couple times a week, one full issue and one brief issue. It's been, it's important that we continue to make content during these times, but it's obviously for everyone. We would all wish to be making content during raging bull markets. But I will continue to post issues. I'm not going anywhere despite the conditions. So yeah, folks can follow me on Twitter and sign up for the newsletter if they're interested. But yeah, I really appreciate you having me on, and hopefully next time it can be.
Yeah, I picked up this tweet from you. This one about the RSIs. This is the one that got me very interested. Like, the RSIs are so low. It's so low.
Low.
I mean, RSIs are in such oversold territory. It's ridiculous. Right. I mean, we haven't seen this for months and months. And at the same time, you correlate that to the fear and greed index, and it's the RSI is actually very similar to the fear and greed index in that it measures sentiment. And I mean, both of them are pointing to the fact that we are very much near a bottom. Maybe we're at the bottom.
We could be. And it's not to say that we're going to turn around and pump straight away, because typically when RSI does get down this low, it takes a while for a base to be built and for a reversal to happen. But that's why it's a great opportunity if you have fiat to deploy.
Yeah, I guess if you do have fiat to deploy, maybe now's a good time to start deploying. We'll talk about that. We'll talk about a whole lot of other things. TechDev, thank you so much, brother. You are part of the Banter fam. Love having you here in the good times and in the bad times, and you always give us such an amazing perspective. So thanks very much, my brother.
Thanks so much, Rand. Have a good one.
Guys, you got to take your hat off to the guys that are here in the bull market and the bear market. We're here to guide you through the bull market and the bear market. All right, before we get into the next part of the show, I've got an important message for Zhu Su.
Hey, Zhu. It's Hard Rock Nick, one of the richest men in the world. This is bullshit, man. My boy Clay had faith in you. You said Asia was max bidding. We're in Fantom, Sol, AVAX, Luna, Bitcoin, and ETH. Pump the fucking bags, call Kyle, and call the devs, and do something.
All right, so that's a message to Zhu Su. Well, I did look at Zhu Su. I did look at some of his tweets for earlier, and I think he's actually very right. I think he's actually very, very right. He says, reminder that macro-induced downturns have more structural similarities to March 2020 than to 2018, which was the downturn during the very risky risk-on environment. Another reminder that we had 3 rate hikes in 2017, and it was the biggest crypto rally year ever. So I think this is all a big overreaction to what's going on. But regardless of that, I guess today we're going to talk about probably what's going to happen in the next couple of weeks, couple of months. And I'm sure you guys have got a whole lot of questions. For those of you who have been here for a while and are still up, the question is, do you sell now and do you take your profits and come back in a while? For those of you who have been here for less time and are now at huge losses, well, what do you do now? What do you do now? These are the questions that we need to answer. And we need to answer those questions for everyone. And I think that's what we're going to spend the next part of the show is actually talking about, well, what do we do now? We can have the pity party. We spoke about it. And we can feel sorry and we can talk about what we could have done and how much money we could have made and what we should have done and throw the whole pity party. But the reality is we are where we are now. And where we are now is we have had a 50% correction. We've had a 50% correction in Bitcoin. It's one of very few 50% corrections that we've had. And you can see they're very few and far between, but every time we have a 50% correction, Bitcoin goes down and then we always hit a higher high. That is kind of like where we're at. So if you look at this without emotion, if you take out the emotion, then what you realize is that we have been given another chance. We have been given another chance because when the prices were expensive, when the market was running, we kept saying, look, we want to buy, but we can't buy because things are so expensive. It's almost like you missed the bus. Well, don't worry, the bus came back. You missed the train. Well, don't worry, now the train came back. Now the question is, what are you going to do? How are you going to position yourself? Are you going to get onto the train or are you going to watch the train go away again? And that's really what this is all about. Now, I read a tweet from Hasaka Trades. Hasaka Trades must be one of the most insightful accounts on Twitter. And he says, the next few days, weeks are going to be of paramount importance. Market hit the reset button. We're going back to drawing board. A lot of positioning and repositioning will transpire. Sow the seeds now for the next outperforming narratives. Be observant. One of the most profound tweets that I've read. I actually tweeted something very similar, but he tweeted, he was much more profound than I was. I said, now is not the time to get despondent, to get demotivated or to contemplate giving up. Now is the time to give it everything, to do more research, to read more, to spend more time strategizing, to spend more time optimizing your portfolio, because the truth is that millionaires are made when markets are down, not when markets are up. So yes, it's nice to have the markets are up, but the reality is it's the money that you put in the bear market or how you position yourself in the bear market when the prices are low that determines how much money you're going to make in the bull market and whether you're going to be able to cash out. There was another very similar tweet from Root to Fire. It says the best thing that you can do right now is not to look at the charts. Instead, use this opportunity to learn more about crypto so that you're well prepared for the years ahead. Eventually, the markets will recover. New life-changing opportunities will come to you if you're patient. Now it's become a real game. Now it's a case of saying, look, you are where you are. Reposition your portfolio. Make sure that you focus on the next narratives. And when you do focus on the next narratives, that is how you're going to make money. If you can identify the next narrative, that is when you're going to make money. I want to remind you that the Axie Infinity explosion, let's quickly call up Axie Infinity and you guys can have a look at it. I was actually looking at this chart earlier. This is the Bitcoin dominance chart. And I was arguing with Sheldon that there's no way that the dominance would go up. And here's the line that Sheldon drew. And he said it's going to have a retest and then a perfect increase in the Bitcoin dominance. And there it is. There it is. There's the perfect increase in Bitcoin dominance. But I want to show you something around the tweet that we had. So let's look at last year. Let's look at when the Axie explosion. Okay, wait, that's the wrong Axie. Let's try and find the real Axie. Okay, so let's look at Axie Infinity, and I'm hoping that this will take us back a long way. Not enough. Let's try and find another Axie Infinity chart. Hopefully, maybe Binance will have a good chart for us. Yeah, so if you look at when the Axie Infinity explosion happened, around May, June, Axie Infinity went from about $2.87 and then hit its all-time high of $170. So you can see that what happens is when these market reset happens, narratives reset. And it's important that you position yourself in the narrative. So he says, that's what a psycho trade says. He says, the next few days, weeks are going to be of paramount importance. Markets are going to hit the reset button. We're going to go back to the drawing board, and there's going to be a lot of repositioning to sow the seeds. Now, I know some of you are watching this and going, oh, but I'm out of money, and you're feeling despondent. And the reality is, that's great. You can feel despondent. You can feel despondent for yesterday, today, maybe tomorrow, but that's not going to get you through this. What you need to do to get through this is you need to be focused. You need to have a strategy. You need to make sure that your portfolio is in a good place. You need to make sure that you're absolutely unemotional about the decisions that you make. Now, I made some decisions on my portfolio earlier, and they weren't easy decisions to make. How do you sell a token that's gone down 80%, 85%? That's, I landed up buying some coins that are very, very high risk, and they went down 80%, 85%. And now I've got to sell them. And my strategy is to sell them and to switch into different coins, because I don't know how long this bear market's going to last. And I want to make sure that I'm holding the right narratives when this bear market finishes, whether it's in a week or a month or 6 months or a year. And so you've got to take some really hard decisions. So the idea is to have your pity party. When your pity party is finished, then get down to serious business and start repositioning your portfolio and put your portfolio in the right order, or what you need to do. So I tweeted over the weekend that my best advice to anyone right now who's in the market is, the first thing is you have to stay in the market. You cannot sell now, because if you sell now and you miss the bounce, there was a mini bounce last night. Let me show you what a mini bounce did last night to some of our favorite tokens. So let's look at some of the tokens that bounced up yesterday. Let me go to that one just as an example. And I want to go into the 1 hour chart. Let's see if we can get a 1 hour chart here. But we had a mini bounce in Fantom yesterday. And in that mini bounce, this is just one example that I want to show you guys, is we had a bounce, and the bounce was from 178 to, it was a 33% bounce. And we're talking in a matter of a couple of hours. And so the best advice that I can give you guys right now is to make sure that you're in the market. Now is not the time to be exiting the market. If you are leveraged, and this is the decider as to whether or not you're going to be able to make your mortgage repayments, that's a different story. But if you're in the market as an investor, the main thing is to stay out the market. I wouldn't sell anything unless it's a switch. So if you want to switch from one play to earn gain to another, if one part of your portfolio is not strong enough and another part is strong enough, like if you don't have exposure to enough layer 2s or layer 1s and you have too much exposure to gaming, then I would switch. And then don't even look at price. Just cut the one and buy the other, and don't even look at the price. We'll talk more about that tomorrow. Start dollar cost averaging into quality. And the reason why I say that is because I find it hard to believe that this price is going to go down much more. I mean, I'm not going to try and pick a bottom, but I'd say I'd be very surprised if Bitcoin went under 30,000. I really, really would be very surprised, which means that now's a good time to start dollar cost averaging. Leave some cash on the side. This could last for quite a while. Leave some cash on the side, but start dollar cost averaging. When they talk about buying into panic, this is panic. The fear and greed index is at 11. This is panic. We've had a 50% drawdown in Bitcoin. We are seeing blood on the markets. There's going to be a bounce. Even if it's not a bounce to the top, there's going to be a bounce. And you want to be in the market for that bounce. So start dollar cost averaging into quality stuff. Leave some cash. The next thing is, right now, we're all over emotional. Everyone's lost a lot of money. There are high emotions in the market. Everybody's got these high emotions. you have to make sure that you don't get emotionally dragged into the market. So my advice here is step away from your computer, stop looking at your phones, take your strategic bets. You know Bitcoin's going to recover. You know layer ones are going to recover. You know DEXs are going to recover. You know that all the key pieces of the infrastructure are going to recover. Place your bets and move away from the table. Go away. Come back a day later, a week later. Trading on every little bounce here, your emotions will get the better of you and you will eventually capitulate. And then I think the last thing, and probably the most important thing, is that this is an absolute rare gift in crypto. Coming into crypto or having the opportunity to buy your favorite tokens at, well, we saw this. I don't have it anymore, but we saw 50% down, 80% down, 70% down, is a rare gift in crypto. Who would have thought that you could buy the tokens? Who would have thought that you'd get another opportunity to buy Bitcoin at 33,000 and to buy Cardano at $1 and Solana at $85 and Polkadot at $16? Who would have thought that you would have had another opportunity to do this? You would have begged for an opportunity to buy these tokens at these prices. Look at the prices. The way that I love to look at this is, let's see how far back we've gone on the clock. And if you look at Avalanche trading at $57, and the first time that it traded at $57 was in September last year. So you've gone back to September last year in terms of prices. Who would have thought that we would have got such a rare opportunity to buy your favorite cryptos? But the reality is that now that you've got the opportunity, is you have to be in the market to play it. You have to position yourself in the market. So put on your big boy pants, stop the pity party, put on your big boy pants, start thinking with the rational mind, start thinking logically, unemotionally, and strategically, and say, when this market recovers, because this market has to recover, because it's going to recover, because that's what happens, even when it feels like it will never recover, crypto's taking over the world. You're going to need layer one power. You're going to need DEXs. You need all of these things. You've been given an opportunity to buy them at prices not seen since September, and sometimes since August, and sometimes since before that. This is a rare opportunity. And if you've just come into crypto, this is the best time to have come into crypto, because you could have come in when Bitcoin was at 50,000 and Ethereum was at 4,000, and you could have been buying it. And now we've been given this opportunity. So pick yourself up, dust yourself off, stop throwing the pity party. When the pity party is finished, Irina says, put on your big girl pants, put on your big boy pants, and put on your big girl and big boy pants, as long as the boys aren't putting on the girls' pants. And then make sure that you've got your bets for what is going to be inevitably the next cycle. And so what we need to spend our time on this week is, okay, we've had the pity party, it's done now. The rest of the week, we're going to be looking at positioning and repositioning and sowing the seeds for the next outperforming narratives, because sitting here and crying over spilt milk ain't going to help us. No one expected this. We all expected another leg up. We all thought that the market would continue to run. It caught everybody off guard. I don't know a single person that called this right. Plan B was telling us it was going to $100. Everyone now on Twitter claims that they saw this and they were all in stables. Bullshit. Everyone was calling this market to go up. We all got carried away. Now we are where we are. And now we've got to make sure we take our bets for the next narrative and make sure we don't lose money. How do we make sure we don't lose money? Well, stay in the market. Because when the bounce comes, the bounce is good. Make sure that you're in the right places in the market. And we'll talk about those buys. We'll start talking about potentially starting to rebuild the portfolio and where you're going to be putting your money. We'll start talking about that on tomorrow's show. So that is my best advice to you. Let's talk about a few other things very quickly. I did see that there was a spat. Oof, this is getting really, really, really ugly. I don't know if you guys saw this. SundeaSwap and CardStarter. SundeaSwap and CardStarter. I was following the tweets here, and I don't know any of the facts, but it does feel like SundeaSwap had a partnership or something with CardStarter, and they were going to give a certain percentage of the SundeaSwap tokens to the CardStarter community. And it seems like all of a sudden they made a decision to drop the number of tokens given to the CardStarter community. Now, I've offered to host a live discussion between CardStarter and SundeaSwap to resolve it, and let's see if they'll take me up on it. If you're involved and you want to, then maybe just go to this tweet on my wall and we can get them both on here. But look, I don't know the facts. I don't want to take sides. I am a big fan of both. I just want everybody to be treated fairly and to make sure that everyone gets what they deserve. I mean, that's really what I want to do, what I want to make sure. Then, speaking of fairly, I don't know if you guys saw, but finally the long-awaited Fantom drop. So there was the long-awaited Fantom drop for Andre Cronier's new project. And they took a snapshot of the top, well, he took a snapshot of the top, I don't know, whatever it was, but only I think the top 20 are getting an airdrop of the new token. And there were some shenanigans going on there. And I think I want to bring Miles Deutscher in here. Miles Deutscher, one of the smartest guys in DeFi today. Absolute wizard in DeFi, follows the Fantom ecosystem. Miles, welcome back, bro.
What's up? Thanks for having me.
Listen, it was a big week for Fantom, right? It was a massive week for Fantom. There were a lot of games going on. There were protocols being set up to capture the value of this airdrop. There were protocols going into the airdrop, out of the airdrop. Oh. What do you think of the net result, net?
Look, I think the net result overall is positive, because when you're getting this much liquidity flowing into an ecosystem, it's going to be a positive in the end, because even if some ends up leaving, I mean, we're still going to be capturing a lot of that liquidity in the end. So I'll just share my screen here so we can actually have a look at what's actually going on. Can we see?
Yeah, we can. Let's get your screen on. There we go.
I mean, we've seen this massive Fantom explosion in TVL. So we're up in the top 3 now for TVL out of all chains, which is absolutely insane. I mean, just look at this, up 171% for the month against all these other chains. So I guess it really just goes to show the power of what Andre is really doing here. We can see Fantom's up 186% in the last 30 days against, I mean, blood on the streets amongst all the other chains. So it's been really, really crazy. I don't know how much time we have to actually get into it.
Go for it. Take your time.
We saw this crazy kind of fight for TVL. So if you don't know, the snapshot pretty much operates in the essence that only the top 20 projects on Fantom actually make the snapshot, right? So if these projects want access to these new tokens, these new SolidSwap tokens, they will actually need to be captured in this snapshot that occurred last night. And what we actually saw was this massive kind of fight amongst these top 20 protocols to receive this snapshot, to receive this airdrop. So we saw these kind of projects coming out of nowhere being created just for the reason of capturing liquidity and TVL. And that's why we saw such an explosion in the Fantom ecosystem, because now you've got all these projects, well, they need to get liquidity so they can get these NFTs so they can distribute tokens to their holders. So we saw a project called VDAO kind of just come out of nowhere and launch. And the Fantom community stood back and they said, hold on, we don't really like this. We don't necessarily agree with this. So a lot of the top Fantom developers came together and they started a project called OxDAO. And it was pretty much the top developers across Fantom, from SpookySwap to Scream, from Revenant, Liquid Driver. They all came together to kind of create this protocol called OxDAO, which recently launched, and they're paying some pretty crazy rates to be able to get this liquidity in to make the snapshot. So we've seen these massive wars, and yeah, I mean, it's just been crazy to see this TVL explosion. Your question was, will liquidity stay in the ecosystem? I think the answer is yes, a lot of it will. I mean, obviously it's realistic to expect some of it won't and some of it will flow out. But I think it's a win-win overall, because it's just really shine a light on Fantom's technology, developers and community, which has really held strong.
Yeah, so there were a couple of protocols that were omitted from the top 20. Tarot Finance being one of them. I must say I didn't see Tomb Finance on the top 20. Mm-hmm. How fair do you think that this thing was?
Well, I mean, I actually tweeted this yesterday. I mean, I've had some conflicting kind of thoughts about this, because on the one hand, it's really positive when you have projects like this bringing liquidity into the ecosystem. Overall, it's really bullish for Fantom. I mean, as we said, look at this massive growth. I mean, it's clear that the network's grown. On the other hand, I do feel a bit sorry for projects like Liquid Driver, Tarot Finance, even Tomb Finance, which didn't appear to be on Andre's screenshots, because I think it's inequitable to distribute to TVL vampires, as I'm calling them, as opposed most of the genuine pillars of the Fantom ecosystem. We've seen projects like Liquid Driver and Tarot Finance really be blue chip projects on Fantom that have been around for a long time. And I guess a lot of the community kind of has a grievance with projects like VDAO coming in, offering insane rewards, sucking up liquidity, and then, poor Liquid Driver, 21, just missing out by one spot. I definitely see why some of the community members are a bit salty overall.
Is it final? Is it full and final? Is the snapshot taken? Is it all full and final?
Okay, so here's the thing. It is full and final, but I do know a lot of developers are actually in contact with Andre, and we're seeing what can be done. I'm sure Andre's aware of the fact that, it can come across as a bit inequitable. So, we'll just have to wait and see over the next few days and see if some of these projects can actually be included, which I hope they are, because, it'll be pretty unfair for Liquid Driver, Tarot, Tomb to miss out. But, as far as I'm concerned, it is final, but, we'll just have to wait and see on that one.
Okay, now, was I right to read a tweet from you? Was it a tweet from you that said that the number of transactions on Fantom actually eclipsed the number of transactions on Ethereum in this period? I've got
it right here. Absolutely insane. We can see that Fantom now has 40,000 more daily transactions than Ethereum. Obviously, a lot of this would be slightly artificial because of the snapshot taking place. So there's a lot of liquidity coming in, lots of swaps taking place. I know Spooky Swap's now the number 2 ranked DEX. So it's pretty insane. But yeah, transactions have overtaken Ethereum, which is insane. And look at this. We're still a 52.8x away. I'm not saying it's comparable. Obviously, Ethereum's by far, the more developed protocol. But, we are kind of seeing now Fantom establishing itself as, a top layer one.
A real layer one. A serious layer one, a serious contender. Exactly. All right, listen, guys. Yeah. We are running out of time, but the good news is that, Miles Deutscher is a contributor on the Crypto Banter website. So if you go to the Crypto Banter website, you sign in with your Twitter. It's the only way you can sign in, because this is supposed to be a Twitter native experience. Well, you can go and read Miles' article about Fantom TVL and what actually happens next. What happens next? There's a whole article here from Miles. You can also follow Miles on Twitter. He also has his own YouTube channel. We'll drop those links below so that you guys can actually do it. Makes amazing content. Really one of the best content creators that I've seen out there in the space. Also, there's a whole lot of other stuff on the website. So and today, earlier on before the show, there was a story about why Solana is dumping. And, whether or not there's anything to be concerned about with the Solana dump. Miles, would you be concerned about the Solana dump and the fact that Solana has been down for so long?
You know what? A part of it concerns me, but at the same time, I know the power of the protocol. I know how solid it is. So honestly, I'm thinking of it as a buying opportunity because I'm confident that they'll be able to iron out some of these issues in the long term. And it's actually something I'm looking at adding more of, to be honest. I'm kind of taking the opposite approach. So I'm pretty confident in Solana. And obviously you have Arweave, which stores a lot of the data for Solana. So that also could be an interesting play if you want exposure to the Solana ecosystem right now.
All right, Miles, listen, good to see you. We will catch you again on Crypto Banter, I'm sure, a few times again this week. Your article is amazing, guys. It's up on the website. Follow him on Twitter. Follow him on YouTube. We'll drop the links below. Miles, thank you, my buddy. Much love.
Thank you very much. Thanks for having me. See you later.
It's smartest kid on the block. Smartest kid on the block, by far. Smartest kid on the block. All right, guys. So there are going to be lots more stories breaking on the Crypto Banter website. Sheldon is also back tomorrow. We'll do a charting show. This story is unbelievable. This Fantom story, insane. Read the Fantom story. It tells you about what happens next on Fantom. Really, really unbelievable. I will see you guys again tomorrow. Until then, diamond hands, my friends. Remember, if you're going to remember one thing today, it's just follow what is in this tweet. I will see you guys again tomorrow.